You're probably a pretty good trader, but your results are showing you still suck. Now, why is that? Well, in the next 5 minutes, I'm gonna go over one of the key reasons why your trading results probably still suck. You see, one of the key problems with this industry is with the prop firms and futures firms is it's more geared towards day traders and futures traders. And what I mean by that is scalpers and people who are intraday in and out of positions quite quickly. If you're the type of position that's in a swing trade and you can just hold the position and just let it run, it's a lot easier for you to make consistent profits. Whereas if you're someone who's day trading or scalping, you're making a lot of critical decisions in a very short time period. So there's a lot more room for error because you're making so many more trades and you're just making so many more decisions in and out. One of the key problems people have is they second guess themselves when they take trades. At least that was one of my key problems. So in the next 5 minutes, I'm gonna go over a trick that makes things a lot easier. So if we go ahead and break down this chart right here, you can see I'm looking here at an NQ chart. And what a lot of people do is they second guess themselves when they take a trade. They take a buy and it goes a little bit against them and they exit the trade, and then it goes up and hits their intended target, and then they're kicking themselves and wondering what the hell they just did because they just faked themselves out of a perfectly good trade. Does this sound familiar? Because this is something that I used to do all the time, and I lost tens of thousands of dollars because of it. Blue funded accounts, blue challenges, many different aspects. So if we look at this chart here, let's pretend that we're looking for a trade right here inside this zone. If we're looking at these lows, we came down and we swept these lows right here. We come take these lows, we pull up above. So up in here, we're gonna start looking for potential buys. Now, if I pull out the long tool here and let's pretend we took a trade right here. So this is something that used to happen to me a lot. What would happen is I would take the trade and it would go a little bit in profit, and then it would come against me and I would start to second guess myself, and I would be fearful to take the loss, and I would just overall second guess the whole analysis. So what I would do is I would exit the trade and then it would come back up and I would either get back in or just scratch the trade completely. And when you do this, it skews your whole data that you've collected. So the proper way to do it, and what you should actually do, is you should have a stop loss or TP mentality. And what I mean by that is you're going to set your stop loss and you're going to set your take profit, and you're going to leave the trade and let it play out. It's either going to do one of the two things. It's going to hit your stop or it's going to hit your take profit. There's only two different things that can happen. So just let it play out, and whatever happens, happens. Because the problem is when you take the trade and you exit it, just for it to go to your take profit, that's when you open up a whole window of making emotional decisions. You could revenge trade, you could full out tilt and enter a position 2 times the size because you felt like the profits that you just lost could have potentially been yours, but they're not. So if you just incorporate a very simple stop loss or TP mentality on all your trades, I almost guarantee it's going to significantly increase your win rate and your overall profitability. In the last 2 videos, which I'll put a link to for one of them right here and one of them for right here, I've taught 2 set strategies that you can use to pass your prop firm challenge to get payouts on your funded account, and you could also use it for your personal account. They're 2 very lucrative strategies that you can use, and the only thing you need to implement with them is this exact method right here. So once again, it's very simple. You're just going to put your stop and you're going to put your TP, and whatever happens when you're in drawdown is okay. There's nothing wrong with the trade coming, even if, let's say, if you entered right here, there's nothing wrong with the trade coming in drawdown and then going to take profit. Some of my best trades that I've ever taken have gone into 60-70% drawdown of the set position and then went and flew to target, and they've always been some of my best positions I've ever taken.